Did you know that according to a legendary investor, the upcoming Tesla stock crash might be the worst ever? Even today, a lot of investors are quite unhappy with the EV company's stock performance in the market. Stay tuned and keep watching to know more about this. With the threat of inflation, deflation, and even global recession looming around in the past several months, it may not come as a surprise how unsatisfying Tesla stock performance is in today's market. Still, Tesla bulls remain firm on their stance and their belief that Tesla stock will eventually bounce back. Today, you will find out why the upcoming Tesla stock crash might be the worst ever. The crash will be worse than 2008, says Jeremy Grantham. Robert Jeremy Grantham, or simply Jeremy Grantham, is a British investor and co-founder and chief investment strategist of Grantham Mayo and Van Otterloo, a Boston-based asset management firm. GMO had more than $118 billion in assets under management as of March 2015. Grantham has often been viewed as a market skeptic. He is arguably a perma-bear or perpetual pessimist, though he has taken a bullish view of the market at times. Even at the beginning of the year, Jeremy Grantham got the market's attention with his super bubble call on U.S. stocks. He shared an even more alarming and urgent message and said that the Goldilocks period of the past 25 years is ending, and the world needs to prepare for a future of inflation, slower growth, and labor shortages, the renowned value investor said in a Bloomberg Front Row interview. He said, "There's only a certain amount of cheap oil, cheap nickel, cheap copper, and we're beginning to hit some of those boundaries." Grantham continued to say that climate change is coming with heavy floods, serious droughts, and higher temperatures, none of which make farming easier. So we're going to live in a world of bottlenecks and shortages and price spikes everywhere, he said. In mid-January, Grantham described what he considers only the fourth super bubble in U.S. history, reiterated that a crash is imminent, and advised exiting U.S. stocks altogether. He predicted a drop of almost 50% in the S&P 500 and said no amount of Federal Reserve intervention could prevent it. He said that the growth of the past century in pursuit of ever higher standards of living left depleted soils, poisoned ecosystems, and a changing climate. Because of this, wildlife is disappearing, biodiversity is in jeopardy, and human reproductivity is slowing. "We have simply shot way beyond the long-term capacity of the planet to deal with us," said Grantham, who operates a $1.5 billion foundation to protect the environment. "Nature is beginning to fail, and in the end, if we don't fix that, we begin to fail as well." In February, Grantham said that a super bubble crash may well be underway. In fact, he believes that the super bubble that has been building for more than a decade may be in the process of bursting. Notably, GMO co-founder Grantham is well known for having predicted Japan's asset price bubble in the 1980s, the dot-com bubble of the late 90s, and even the U.S. housing blow-up that came before the 2008 financial crisis. That said, he is now warning of another similar crash in asset prices, with speculative tech stocks first in the firing line. Do you share Grantham's belief about the super bubble? Let us know what you think in the comments section below. He said, "The S&P went up 25% last year, and a lot of the most speculative stocks of 2020 were already going down. That is very rare. It happened in 1929, it happened in 1972 before the very big decline then. It happened in 2000 before the tech wipeout." Grantham said that the process of a super bubble bursting appears to be well underway, with many of the most speculative stocks already losing at least half their value from the peak. Moreover, Grantham warns that stock values will be weighed down by two factors that have been boosting them for decades. One is higher inflation, while the other factor he feels could weigh on share prices is a possible drop in the current record share of economic output going to company profits. Thus, Grantham is warning the U.S. may be headed towards a housing crisis as mortgage rates soar, and the effects on the economy could be devastating. This is supported by his prediction about the S&P 500, which has proved to be insightful as the index is now down roughly 15% year-to-date. Stocks, particularly in the once high-flying tech sector, have been hammered as the Federal Reserve continues to raise interest rates in hopes of combating levels of inflation not seen in 4 decades. The legendary investor argues that the U.S. economy can weather dramatic drops in the stock market, as evidenced by the merely mild recession that surrounded tech stocks blowing up during the dot-com bubble. However, the economy is unlikely to come through unscathed when it comes to a housing crisis. Staying true to his belief, Grantham said at the beginning of September that the brewing super bubble is yet to pop. If this unfortunately happens, it does not bid well for Tesla along with other corporations. In fact, Tesla shares dropped a few days ago along with much of the rest of the market. The leading EV company's stock was down by 3.6%, although some analysts believe that the threat of increased competition was at least partly to blame. At that point in the session, the tech-heavy NASDAQ Composite Index was down by a similar 3.7%. Still, Tesla is quickly ramping up its output from 2 new factories in Texas and Germany, and anticipation of its higher vehicle production is a major reason traders have bid the stock up to a price-to-earnings ratio of more than 100. Even with those growth prospects, its forward PE remains at alarming levels since investors expect the EV leader to continue growing strongly for many more years. The company itself expects its EV production to increase by 50% annually for at least the next several years. Moreover, global equities research analyst Trip Chowdhury forecasted that Tesla is slated for a super record quarter this year. Based on observations from the Fremont factory and Giga Texas, Chowdhury estimates that Tesla would deliver more than 500,000 units in the last quarter of this year. Notably, this forecast is a product of his very own observations during his visit to Tesla's Fremont factory in California. His prediction of more than 500,000 unit deliveries was similar to Canaccord Genuity analyst George Gianarikas' comments after visiting the Fremont factory. Chowdhury observed Tesla employees' dedication to their work, noting that their motivation was unparalleled in the car industry. He added that Tesla employees worked throughout Labor Day weekend. Similarly, Gianarikas was mesmerized by the factory's chaotic symphony and employee morale. The Tesla analyst also highlighted that the Fremont factory's production timeframe has become at least 10% more efficient compared to Q2 2022. He also noted that Model S Plaid production and deliveries have significantly ramped. Despite such surprising but very welcome positive forecasts for Tesla, the leading EV company will still undoubtedly be affected when the super bubble pops, so to speak. In fact, Grantham said the current US market is looking eerily similar to the dot-com boom and bust, but as in 2000, he warns it is not only the speculative stocks that are heavily overvalued and will fall. I think it would be unlikely that the market would not come down by 50% from its peak, the broad market, the S&P, and it would be unusual if the specs did not do worse than that, he said. That said, he advises investors to look for beaten-down stock values in some of the developing markets. Emerging markets, some of the cheaper developed countries, would be very much a better idea than a massive holding of US equities. He says, if you have to own US stocks, you should. High-quality stocks that are in good financial shape, because this can always spiral into something of a financial crisis. They often do. He proceeded to warn, make sure you don't buy expensive markets, expensive stocks. Still, as earlier mentioned, Grantham has often been viewed as a market skeptic and is arguably a perma-bear, or perpetual pessimist, though he has taken a bullish view of the market at times. However, that is not to say that his predictions are incorrect, given that he was actually right several times. And whatever you do, get rid of this fear of missing out, this terrible lust to participate in profit-making that comes along at the end of every one of the great bubbles, says legendary investor Jeremy Grantham. For more Tesla stock content, visit our channel and watch our other videos.